Hi, this is Paul from globaltradingsoftware.com, and this is an Elliott Wave trading tutorial. Not on the daily time frame or anything like that. This is futures. This is the 10-year yield futures on the 30-minute time frame. So Elliott Wave can be used on any time frame really, because what we're looking for is a trend and a pullback against that trend, and measure it and then trade the continuation, and that's what Elliott Wave does on that fifth wave move. First of all, some housekeeping though, because we need to understand where that trend started. I mean, it's obvious that this is the trend right here, but where did it start? Where do we isolate? So we need to understand that we've got a good support zone right here, which I've actually put in red here. And what we'd normally do is look to isolate the start of the wave count with the Elliott Wave indicator suite when we've got a low during this, when we've got a crossover in the stochastic in the oversold zone. So that's the lowest point there. And then as you can see, we've got some corrective actions here with the Elliott Wave. And then we get a wave 1, wave 2, which is done automatically by the Elliott Wave indicator suite, the big long wave 3, and then the wave 4. This is the important bit now, measuring the performance of this wave 4. Is it normal, as it were? And using these tools in the Elliott Wave indicator suite to actually measure that. So we've had a wave 4 pullback. It's pulled back into the green zone. So if that support holds and moves away, there's a 85% probability it's going to go on and hit this automated fifth wave target zone here, about 2.7. So that's the first bit. The next bit is, during this wave 4, we measure this oscillator pullback with the Elliott Wave oscillator, again included in the Elliott Wave indicator suite. So we look at the highest point on the wave 3 in the oscillator, and then we measure a fib retracement, which is in the training videos, how to between 90 and 140. As long as this wave 4 stays in there and it doesn't break the 140, we're good. The next thing is the false breakout stochastic. So this these little yellow dots on the top there denote strong false breakouts. So we try to come out of the overbought zone, it goes back in again, it crosses over, it goes back in again. So what are called false breakouts. So that denotes really strong bullish trend. So then when we pull back against that and we cross over, which we've just done in the oversold zone, there's a likelihood, a good likelihood, that it wants to return to that overbought zone, to this false breakout status. So as far as the wave 4 behavior is concerned, everything ticks the box. We now need to look for an entry. We do have down on the bottom here a new indicator called the bias depth heat map. Now what this does is looks up on 6 different time frames, higher time frames, to see where we are with regards to bias. So we're pretty neutral. We've got some green in there as well. We'd like to push up through there, so that's going to guide us a little bit for when it's right to enter. But right now I'm thinking an entry around about 2.612. We're above this pivot just here, and then what I've done is I've actually collected this pivot point low here, these lows here, and put in what we call a support and resistance zone. So I want to make sure I'm clear of all of that noise, if you like. So we've got lots of pivots bouncing off this zone here and here, and we test it from underneath at this point. So we want to make sure that we're above there. So 2612, and we will see this bias indicator change more of those the bias depth heat map, more of those time frames will turn to green as this starts to move up. Now if 5 out of 6 are green, for me that's pretty good for an Elliott Wave, and I would probably go, because you can see this bottom one never really changes to bullish here. So we got to look at past performance and how this is that higher time frame on the monthly has never gone to green. So we know that this is our baseline for bullish moves, because we just had a really big bullish move right there on that wave 3, and we want to continue that main trend. So that's my entry, 2612, above all of this noise. Wave 4's behaved correctly, and our risk to reward is 1 to 2.5 into the middle of that fifth wave target zone. Our stop would be 1 tick below that wave 4 pivot. Entry here, and then we just measure that with the fib extension, 1 whole 1 to risk for a potential reward of 2.5. So that's a really great risk to reward there. Quite tight stop really for this type of trade. Definitely worth having a go, and I'm going to set the order on my NinjaTrader platform to actually take me in that long for this particular trade. So that's how to do it. To manage the trade, we will use the manager. Again, I'm going to put a link into the bottom of this video description here to watch the manager training video. It's a half-an-hour video, and it talks about these dots and the colored candles and this ribbon that you see here to help you manage that trade once it's in. Hopefully that helps. A nice little Elliott Wave move potentially on the 10-year yield futures, and again, Elliott Wave can be used for anything: forex, futures, stocks, any time frame. All you're looking for is a trend, a pullback against that trend, and the Elliott Wave indicator suite helps you measure that pullback, follow the rules, and that fifth wave is the highest probability move.